Section 8. Unit 5, Veterans Administration Loan Guarantee Programs. Introduction and Objectives. Lesson 1, VA Loan Benefits for Borrowers. Lesson 2, Eligibility for the VA Loan Guarantee Program. Lesson 3, Applying for a VA Guaranteed Loan. Lesson 4, the VA Loan Funding Fee. Lesson 5, VA Loans, when the CRV is less than the sales price. Lesson 6, Consumer Management of the VA Guaranteed Loan. Lesson 7, Additional VA Loan Programs. The VA Loan, Special Programs. Cash-out refinancing. The VA's cash-out refinance loan is for homeowners who want to tap into their home equity for debt consolidation purposes, tuition, or home improvements. It can also be used to refinance a non-VA loan into a VA loan. Lenders can make loans up to 100% of the value of the home. Because the loan amount can exceed the current balance on the original VA loan, the borrower must go through the qualifying process again, including submission of a COE, income verification, and an appraisal with a new certificate of reasonable value. Interest Rate Reduction Refinance, IRRR. This loan program is similar to the FHA Streamline program. It allows refinancing of a VA loan in order to obtain a lower interest rate. The amount of the loan cannot be more than the outstanding balance of the loan to be refinanced, other than the amount of any closing costs that are refinanced. A 0.5% funding fee applies, but there are no requirements to submit a COE, no new appraisal, and no income or employment verification. Native American Direct Loan Program, NADL. Established in 1992, the Native American Direct Loan provides direct home loans from the VA to eligible Native American veterans to finance the purchase, construction, or improvement of homes on federal trust land, or to refinance a prior NADL to reduce the interest rate. The NADL program is a great option for Native American veterans living on tribal land, which is land owned by the federal government and held in trust for certain tribes. Of course, the regular VA home loan program is available to Native American veterans, as it is to other veterans. The NADL program, however, assists Native American veterans who are unable to find a lender willing to make a regular VA home loan due to a property's location on tribal land and the unique issues this creates. The NADL program is different from the traditional VA home loan because the VA is actually making the loan. In the traditional home loan program, lenders make the loans, and the VA provides the guarantee. But here, VA is actually lending the money to Native American veterans living on tribal land. Veterans are eligible for the NADL program if they meet the eligibility criteria for the VA home loan program and if their tribe has a valid agreement with the VA to offer this program. Specially Adapted Housing. The VA provides two types of housing grants to active armed service members and veterans who have permanent and total service-connected disabilities. The grants must be used to modify the veteran's home to accommodate the disability. The Specially Adapted Housing, SAH, grant can be used to build a specially adapted home on land to be acquired. Build a home on already owned land, if it's suitable for specially adapted housing. Remodel an existing home to accommodate a disability. Pay the unpaid principal mortgage balance of an adapted home already acquired without the assistance of a VA grant. The maximum dollar amount allowable for SAH grants in fiscal year 2016 is $73,768. The Special Housing Adaptation, SHA, grant, which is smaller, may be used to adapt an existing home in which the veteran resides that is owned by either the veteran or a family member. Adapt a home the veteran or family member intends to purchase in which the veteran will live. Help a veteran purchase a home already adapted in which the veteran will live. The maximum dollar amount allowable for SHA grant in fiscal year 2016 is $14,754. VA Native American Direct Loan Program Video Transcript. Greg Nelms, VA Loan Guarantee Service. Greg speaking. The Native American Direct Loan Program was established in 1992. It started because there was a need for Native American veterans to have access to financing on trust land. In the Direct Loan Program, the veteran will come directly to the VA will process the application, close the loan, and eventually service the loan. Tony and Marissa Cabe, Navy veteran and members, Eastern Band of the Cherokee. Tony speaking, we're both Native American and we live on the boundary here. We can't just go out to any federal or bank institution that we want to and apply for a loan to build a house on the boundary. So everything's run kind of through the tribe. And that's when all those restrictions start coming into play and stuff. But with the Native American direct loan, we were able to actually build the house that we had always talked about wanting to build because they were providing the loan directly from the VA, and that just freed up everything, allowed us to go in any direction we wanted to, really. Marissa speaking, it cut out the middleman and made the whole process easier and allowed us to build the home that we wanted to build. The whole loan process, I think, was very easy to navigate, and Greg and Arnis were both great. Even though we've only been here since May, it's home. It's a dream come true. Greg speaking, the first step in becoming an eligible tribe with VA to use the NADL program is to contact a regional loan center, a Native American direct loan specialist. Terry Henry, Council Chair, Eastern Band of the Cherokee Nation. Terry speaking, the Native American Home Loan Program is something that all tribes have access to if they have an MOU with the VA. I think that it is an incredible enhancement to any housing program, any housing opportunities that a tribe might be able to offer, but it also puts resources in veterans' hands. It's an awesome way for the government to show our Indian soldiers how much they appreciated their service to this country. VA Specially Adapted Housing Program. VA Specially Adapted Housing Program. The Specially Adapted Housing Program is a grant program. So it's different from a loan, you don't have to pay it back. And it's meant to help certain severely disabled veterans either adapt or build a home that will help them to acquire a barrier-free living environment in their own home. It's available to certain severely disabled veterans, and it helps them live more independently in their homes. What adaptations are available with the SAH grant program? The adaptations that are available are fairly flexible because every veteran is different, every home is different, and everyone's needs are going to be unique. For our larger grant, for SAH, what we're typically looking at is to try to improve access and mobility. So first, we're trying to make sure that veterans have ingress and egress. So sidewalks, ramps, lifts, how do we get in and out of the house? We also want to make sure that the veteran has proper sanitary facilities, so we do a lot of bathroom adaptations. Over and above that, we want to make sure that whatever areas of the house the veteran wants access to for their specific needs and wants, we can try to accommodate that. For the Special Housing Adaptation Program, our smaller grant, for visual impairment, we see a lot of things in the area of fluorescent lighting and eliminating tripping hazards. And for loss of use of the hands, special switches to turn on lights and open doors are some typical adaptations that we see. Who is eligible for the SAH grant program? Eligibility is determined first by the Veterans Service Center, so everyone needs to have their eligibility determined first and foremost. But generally speaking, veterans must be 100% service connected for certain specific disabilities. For our larger grant, which is the Specially Adapted Housing, or SAH grant, we're usually talking about disabilities surrounding loss of use of the lower extremities. There are some other scenarios that could potentially make a veteran eligible, but that's typically what will involve eligibility. For our smaller grant, which is Special Housing Adaptations, or SHA, generally the eligibility criteria involve severe visual impairment or loss of use of both hands. Do I have to own the home to qualify? For the bigger grant, ownership is a requirement. So the veteran does have to have an acceptable ownership interest in the property, but it is important to note that the veteran doesn't have to be the only owner of the property. The veteran can be a joint owner with a family member, a friend, or someone else and still take advantage of the program. For the smaller grant, the veteran does not have to have an ownership interest. But a family member does. The VA loan, second mortgages and assumptions. Second mortgages on a VA loan. What if a veteran who's obtained a VA loan needs extra cash for remodeling, updates, or another purpose? It's possible to obtain a second mortgage on a property subject to VA guaranteed loan if it's approved by the VA legal department. The first and second mortgage liens don't exceed the CRV. The interest rate on the second mortgage is equal to or less than the interest rate on the first. There are no toxic loan features, short-term paybacks, prepayment penalties, balloon payments. Assumptions. VA loans are fully assumable, and the new buyer doesn't need to be a veteran. This can make assuming a VA loan attractive when interest rates climb. In the past, the really cool part was that the new buyer didn't even have to be qualified by the lender. However, you can probably see the problem: borrowers defaulted, and the lender went after the prior owner. For VA loans originated since March 1988, an assumption requires lender approval of the buyer's credit, which may, but doesn't always, let the seller off the hook if the buyer defaults. However, if a veteran allows an unauthorized assumption of a property covered by a VA guaranteed loan and it's discovered by the lender, this can trigger a requirement that the entire loan balance be paid in full. For a veteran to be fully off the hook in an assumption, the original borrower of the VA loan must obtain a release of liability from the new buyer. This is meant to ensure that the new buyer takes full responsibility for defaulting on a loan. If the new buyer is also a veteran, it is possible to apply for a substitution of entitlement. This is where the new buyer's entitlement is substituted for the original buyer's entitlement used on the loan, restoring the original buyer's entitlement in the same way as if the loan had been repaid in full. The substitution of entitlement is a novation, which means putting a new contract in place of an old one. It makes a new loan between the lender and the new borrower, and removes the original borrower from the equation completely. The certificate of reasonable value. As you know, when financing a real property purchase, lenders will require borrowers to obtain an appraisal of the property. The appraisal helps the lender determine whether the underlying value of the property makes it suitable for use as collateral on the loan. With a VA loan, this appraisal must be in the form of a certificate of reasonable value, and must be performed by a VA-assigned certified real estate appraiser. A CRV has a shelf life of only 6 months for resale properties, and 12 months for new construction. So what happens if the appraiser returns a CRV that's less than the sales price? A borrower who still wants to move forward with the purchase has these options. Pay the difference in cash. Get the seller to reduce the sales price to match the CRV. Some combination of the two. When the borrower makes up the difference in cash, the VA has the right to approve the source of these funds to ensure that they're not a loan, which would alter the borrower's debt ratio and put the borrower at a higher risk for default. The VA loan funding fee. The U.S. Department of Veterans Affairs, VA, funding fee is based on a percentage of the sales price. The VA is guaranteeing the loan, so if the buyer defaults, this fee helps to keep the program running for future generations of military homebuyers. The funding fee is required on most VA loans, with the following exceptions. Veterans receiving compensation for service-connected disabilities. Veterans receiving retirement pay in lieu of disability compensation. Spouses of veterans who died in service or died from service-connected disabilities. Transactions in which a large down payment is made. The funding fee must be paid at closing time, but borrowers have the option to either finance it or pay it in cash. If it's paid in cash, the buyer can ask the seller to pay it. Borrowers who finance the fee may do so, even if this results in a total loan amount that exceeds the certificate of reasonable value. However, financing the fee may not tip the loan amount above the overall loan limit.